Hey, good afternoon, everyone. It's Hector Aguilar with Aguilar Realty Group.
And Ben, your agent with Aguilar Realty Group.
Hey, we're really excited about you joining us today. As you can see today, I'm a little bit mobile. I'm at a 2-day training here in Orange County, and I didn't want to miss an opportunity to bring you some amazing content once again. This week, we want to focus on giving buyers kind of an update as to what the state of the real estate market is right now, right? We just
Yeah,
got out of 2021. 2021 saw huge increase in equity to home sellers, saw a lot of competition for buyers in terms of making offers. We saw
yes.
multiple offers. And so Ben and I wanted to discuss today with you is what the state of the market is for buyers as it stands as of today, January 26, 2022, and looking forward into this first half of the year.
Yeah, that's I'm excited to share with our audience all this great stuff we came up with today. Let's start, like you said, what is the state of the current real estate market, Hector?
So here's what I've seen, and Ben and I have seen over the last maybe, let's say, 40 to 45 days. We saw some strong closings in December from buyers that got into escrows on their properties, like in late October, early November. And of course, then the holidays came, and we still saw closings. And we also started seeing some listings hit the market. But
Yeah,
here's what we've noticed, or at least I've noticed, Ben, and I'm sure you have too, is in the first 3 weeks of the year, we've started seeing new listings come on the market. But here's the interesting thing is they didn't sell in 3 days. They didn't sell in 7 days. They didn't
yeah,
sell in 10 days. And many of those listings are still sitting on the market. Now, traditionally, Ben, at the beginning of the year, as people come out of the holidays and the end of year celebrations, people make some expenditures. They probably spend a little bit of their money they have saved up for their home buying purchase.
yeah,
And honestly, right now with the news that's going on about the stock market, the Fed funds rate, the Fed Reserve raising the rates, the mortgage interest rates changing, a lot of buyers are on the fence.
yeah,
So we're starting to see that homes are sitting a little longer on the market. It
yeah,
doesn't mean, I just want to be clear, it doesn't mean that prices are going to come down. And let me tell you why, Ben. The reason why prices aren't going to come down is because there's still a lot of high buyer demand. Now,
yeah.
if you're a buyer in today's market, and 3 months ago you were in the market, I've got some news for you. The rates have gone up, right? And because
Yes.
the rates have gone up, we started to see that even a month ago, rates were around 2.6, 2.7%. Now, I'm not a licensed mortgage professional, but we have vendor partners we work with. We stay in touch with them all the time. And this is what we've seen with our buyers that we're working with right now that haven't been able to tie up a property in escrow or get under contract. Is rates have gone up almost a full point, right? The rates have gone from, let's say, 2.6 to 2.7 with the fair FICO score somewhere between 660 and above to now being around 3.5 to 3.7%. Again, I'm
And
not a
what's that
mortgage
mean?
banker. Well,
What's that mean?
it's interesting. That's a great question, Ben. What does that mean? Is that means that your mortgage payment is now going to be more costly than it was even 4 months or 4 weeks ago. And the reason why is because now you're paying between 3/4 of a point to maybe a full point higher on the interest rate. So the cost of money is more, right?
And and let's just give it a scenario, Hector, a 1% increase, because people are that's what we're seeing, right? Increase at least a point, at least a 1 point, which is
Right.
1%. What does that look like, Hector?
Man, it actually means about $200 to $300. Somewhere between $200 to $300 more a month. Let me correct that, between $150 to $300 a month, depending on your price point, right?
Right, right.
And keep in mind that not only are you going to need money for your down payment and closing costs, but you may need also money now to keep your rate low, to buy your rate low, right? To actually buy it down, to be
Okay.
able to get to maybe 3%. It might cost you $4 or $5,000, but hey, it might be worth it. Let me tell you why. If you can secure an interest rate that's lower by paying $4,000 to $5,000 up front right now, that means that in the long run of your loan, you're going to save thousands of dollars over having your loan 10, 15, 20, 30 years, right? So
Yeah.
the important thing is to understand that you're still as a buyer, you should try and get under contract as soon as possible. And what do I mean by that?
Before you get into that,
Yeah.
Hector, let's. So I put up how much money will you need, and you're gonna cover that. Of course. I guess we're going back to, how is the state of the mortgage market you put up, because I think it's understanding the mindset, right? Before, people are like, oh, let's just know what the interest rate looks like. How much money do we need? Well, if we can have that right mindset getting into it, I think that's the better foundation, right?
Absolutely. And you're absolutely right, Ben. I think, look, rents are on the rise as well. Even though your mortgage payment's going to be higher, you're going to secure a mortgage payment if you're in a fixed rate loan that you know is not going to change, come moving 10, 10 months down the line, 12 months down the line, a year or two down the line. You know what your mortgage payment is going to be.
Yeah.
But the truth is that rents are on the rise. There's no slowing down with rents. We were just doing some research
Right.
on 3 bedroom, 2 baths in West Covina. They're going for like $3,000 a month. So
Yeah.
you may not be able to secure a rate or a mortgage for $3,000 a month when it comes to your mortgage payment and what you want to buy. But if you can get $3,500 a month and you find something that's in your budget, guess what? That's going to be $3,500 a month for a long time. So
Yeah.
don't be afraid of making a move now. Many buyers are thinking, oh, the rates are going to go up and prices are going to drop. No, that's not true. There's still a lot of demand. We're not going to see price increases like we did last year of almost 19% appreciation. It's going to be a little bit more standard. It's going to be maybe 2 or 3% per year this coming year, 2022, maybe 2023. But the truth is that you need to buy a house sooner rather than later. Don't make the mistake of saying, oh, prices are going to drop 3, 4 years down the road. Well, what good is it if the rate is 5, 6, 7%? The payment's going to be larger even if you pay less money. So just
I
keep
think
that
I
in
have
mind.
I think I have an infographic that kind of shows that
Yeah,
here.
can you put that up, Ben, real quick?
Yeah, so um,
And I know that maybe our infographics aren't on average our price points in a Southern California market, but this is
right.
just a comparison, right? Just so that people can see really what the difference is going to be in terms of the payment and how much they're going to save. The truth is that I think that graphic might show. What does it show, Ben? Because I can't see it. I'm on
So
my phone.
this graphic is hits the point to the nail on the point, however you say it. Facts of fiction. So first one, it says fiction. Should I wait for the mortgage rate to drop? And it says facts. Mortgage rates are hovering over historical lows, but experts say they're going to rise, just like what you just talked about. By the end of this year, Freddie Mac, Fannie Mae is saying that you're definitely gonna get up to like a
I'm on the video
3.8%.
right
So that's definitely the fact. And you guys gotta focus on the facts rather than listen to the noise outside.
now.
Second
Right.
thing, the fiction is that there are no houses on the market. Right. Fact that since January, the number of single family homes available for sale has been rising. And we actually seen that. I've seen that myself. And I do market um, preview of
Updates.
homes like yesterday, which was cool, and I showed one of my buyers, this is straight a good story. I showed him, hey, she wanted a home in Victorville for
Hmm.
500,000,
Okay.
500,000. But here's the catch: it was a 5 bedroom
Hmm.
for 500,000, and I showed her, and there's only one that popped up, and
Right.
she said, oh, let's increase it, 600,000. No houses showed. So inventory is still low, but it is moving up. And the last fiction, it says every home is selling for way more than asking price. Well, the fact is that while home prices are appreciating today, roughly 6 in 10 homes sell for every list price. Can you talk about that, Hector?
Yeah. Here's what we're seeing is that we are still seeing, and this is going to go towards the next topic that we're talking about. What does it take
Perfect.
to get your offer accepted? Right.
Yes.
Right now, we're seeing homes sitting on the market just a little longer. They're not selling in 7 days or 3 days or even 2 weeks. It seems that they're kind of the happy point right now is about 24 days. And so what's happening is it's taking a little bit longer, but you can still make an offer on a property that that is available, but you may not have to overbid, 10, 15% above asking price, but you still may need to overbid, 2 or 3%. So to that avail, what is it going to take to get your offer accepted? There's a couple things you have to do as a buyer. Number one is you have to know your budget, right? Um, no longer are you able to go out and, hey, I want to go see a home. I want to go check it out before I talk to a lender. The truth
Yeah.
is that homes are not sitting on the market that long for you to do that. It's absolutely important that you speak to a mortgage lender, review your credit. If your credit, let's say, the truth is anyone that has a FICO score above 80 or above can get a mortgage, whether it's FHA or maybe like a higher interest loan. It's possible. But
Yeah.
as a buyer, you have to make sure that you understand where your income is at, where your credit is at, and get pre-approved, not only pre-qualified, because there's a difference. You need to know how much you're approved for so that you know what we can look for, right? And understanding that and finding out what your budget is going to determine, where Ben, myself, or some of our buyer specialists are going to be able to show you properties. For example, if you want to stay in West Covina, I know that the median price in West Covina is about $800,000. Now, if
Yes.
you're pre-approved for 850 or 900,000, then yeah, maybe we can show you in West Covina. But if you're approved for 600,000, then we need to sit down and discover together what homes and what neighborhoods are going to offer you that $600,000 that you're approved for, right? We have to be realistic as a buyer. We have to make sure that, okay, what areas are near West Covina that can give me the $600,000 that I'm approved for, and be okay with that, right? So that's the first thing.
So, question. This is a
Yeah.
great segment because I do have a buyer, and he's looking for Orange County, Anaheim, Pelican Hills, that area.
Mhm.
But in the meantime, I'm glad you brought this up because there's a difference between pre-approval and pre-qualifications, right? I mean,
Yes.
like our lender told me the other day, he doesn't want his credit check.
Right.
But show him homes. He's pre-qualified, but you're saying that get pre-approved, not pre-qualified. Like what?
Well, here's the thing: is that there are some clients that maybe are working on their credit. They're trying to improve their credit. They're trying to get their scores up, or they're just kind of guarded towards their credit. And the
Yeah.
pre-qualification, it's basically based. Here's the difference between the pre-qualification and the pre-approval. When they
Okay.
talk to a lender, what they do is they let them know what their income is, okay,
Yes.
verbally. They'll tell them how much income they make, how much money they have saved up, how long they've been at their job. And the client will give the lender a ballpark figure of what they understand their FICO score is. So with that information, a lender can do some numbers. They can look at their qualification and say, okay, based on that, you're pre-qualified. But it's important to know you're not pre-approved. What's the difference? The pre-approval is the buyer sends in the lender their pay stubs, their W-2s, their taxes, copies of their bank statements, and they allow them to run their credit to verify what FICO score they have. Because a FICO score is going to tell you, number one, what loan program they can get into, and number two, what kind of interest rate they would qualify for, right? The better the credit, the better the interest rate. The lower the credit, the higher the interest rate, but you can still get into a mortgage. So that's the difference between being pre-qualified and pre-approved.
Now,
It's just, go ahead.
go ahead. Finish your thought, and I'll
So it's just a matter of, do I provide my lender the documentation and give them the opportunity to run my credit, or do I just rely on, or do they only rely on what I'm giving them verbally to give me a pre-qualification? So being pre-approved is much stronger as a buyer than just the pre-qualification, but the pre-qualification sometimes is necessary just so that the client can get a ballpark, right? So for
Yeah.
example, like your client in Orange County, right? In
Right.
Pelican Bay. Let's say he doesn't want his credit run. It's interesting when you've got consumers that have higher incomes, businesses, they're really guarded about their credit because they understand the power of credit, right?
Yeah.
So I wouldn't discount that buyer as not being able to buy. If he tells us, hey, I have $300,000 or $500,000 available for down payment and closing costs, hey, that's a very qualified buyer in my opinion, right?
Yeah.
But the important thing is to understand, now that we have a number, let's say your client in Pelican Bay, like his budget is $3 million. Cool. Let's start putting together a list of properties that will afford him that list of properties that are now in that price range, so he can start looking and seeing what properties he might like, right? And then we can start showing him some properties and seeing what he likes. And at some point, he's going to need to get pre-approved. Now, on the reverse, if you have someone that, let's say their budget is $500,000 or 600,000, and they're trying to go FHA, which is 3.5% down, which is about $20,000 for down payment, right? Now we're going into how much money do we need, right?
Yes.
Same thing, right? We need to understand They're going FHA. Their FICO score is 620, which they can still get an FHA. They're going to need 3.5% down for down payment, which is.
Can I ask a question before you finish this question real
Yeah, go
quick?
ahead. Go ahead.
Okay, so if a buyer's mind says, "Hey, I just want to get pre-qualified because I'm very careful with my credit," and they ask me or they ask us as an agent, "Hey, can I go start looking at homes? I did get pre-qualified. Would you take them out and are they okay to look at homes
You know,
at pre-qualification
that's a
stage?"
great question. If they're willing to share your lender's information and you have a conversation with their lender, whether it's a preferred lender we refer them to or their own private lender, and we can verify with that lender, look, based on what they gave me and their income, based on their FICO score they gave me, and based on the amount of money they have
Yeah,
available, this is what I believe they qualify for. Absolutely. Let's go and make an appointment, show them maybe 1, 2, or 3 houses. And then the next step is this. If you're a serious buyer, you need to get pre-approved. No questions asked. Now, I get it. You want to see what the market out there can give you. By all means, let's go out and take them to see 2 or 3 houses. But to move forward, you need to be pre-approved because in today's market, sellers are only looking at, sellers are only looking at buyers that are pre-approved, period. If you're just pre-qualified and you don't have a letter of approval, you're not in the game. Let's be honest, you're not in the game.
yeah.
So
I want to put one thought out there as well. During a couple prior consultation, um, people are, and I myself is guilty before because my wife and I love home shopping, home previewing. Because you look at shows like Home Improvements and all those cool shows, and then you just want
right,
to go out and start looking at home and start home dreaming. But the reality is, there's a process,
there's
and
a
in
process. Absolutely.
that process is actually, I would say, home showing is the fourth step in the home process. You
Right.
know, and match with us if you're ready to buy or sell. And you want that private consultation. Our numbers below, our websites below, and we'll show you that process. Once you get that clarity of that process, then you realize that, hey, buyer A would have a pre-approval, buyer B would have no pre-approval. Who you think the seller will accept their offer? And 9 out
Correct.
of 10, 10 out of 10 times, the buyer's like a person with pre-approval. So
Absolutely. So here, let's touch on that
yeah, let's
home
sure.
GTV because here's the thing, right? HGTV has an incredible lineup. They have an amazing show. They have Flipper Flop, they have Hunters International. But people have to understand that that's a production. What does that
Yes,
mean? Is that they have people behind the scenes that are calling on these houses. They probably talk to the sellers agents and say, hey, we want to feature your home on our channel on this episode, and they line up 3 houses. And these buyers, they're legitimate buyers. They're legitimate people that are looking. But what
yeah,
they've done is they've done a lot of pre-work and they've narrowed down 3 properties of the 15 or 20 that they've seen, and they
yes,
and they put a show together, right? It's all
yes,
production. It doesn't mean it doesn't
yes,
happen, but the reality is homeowners are not going to see 2 or 3 houses and they're going to get their first house they selected or the second house they selected on the first offer. It
right,
just doesn't happen. It
right,
happens minimally, and buyers really need to know that it's the reality is not like that, right?
yes,
So
yeah.
I really appreciate, Ben, that you talked about having that process in terms of what it takes to be a qualified buyer, right? Let's do a buyer consultation. Let's talk about those things. Let's answer your questions and get you a really qualified buyer, not just someone out looking at homes and opening doors, because that's not what we want. We don't want to give you a false pretense as to what's available to you when you really don't qualify for that. That's not what we do. Our
And
goal, our mission statement is to provide you service so that the transaction and the process of buying is a smooth one and we can establish a long-term relationship with you.
And one special thing that if you in the process of the home and part of the buying consultation with the Aguilar Realty Group is that we have a preferred lender ready to go right after the buyer consultation. So one thing that I want to say is, and it's a privilege working with Aguilar Realty Group because we almost have a full service production
Process.
for a buyer like we have. And for you buyers that are watching, you will get the full service, meaning you're not going to get it from any agent sit down with you, kind of give you an introduction, give you even to the fact that we'll explain what some terms you need to know
Hmm.
while you're in the process of doing this. And when we get you set up for the pre-approval, you'll by that time be excited, be ready, just be, your offers are going to be strong and we're going to negotiate strongly for you. So
You know,
in the, go
go
ahead.
ahead, Ben. Sorry, finish your thought.
No, I'm in that pre-approval and that offer. What the next step is the offer, and
Right.
but
Well,
before,
one of the things that I wanted to talk about, and I didn't mean to cut you off, Ben, is along the lines of the processes. We're more than happy to send you a link to our site that actually details the A through Z process as a buyer. And it's going to give
yes,
you everything from, who we are, our experience, what our mission is, our terms of service, our buyer's packet, what is title, what is escrow. It'll give you a sample of disclosures. I mean, it runs you through the gamut. So again, it's absolutely free. Just, you've got our link below, you've got our number, reach out to us. We'd love to send that to you. And kind of our goal at Aguilar Realty Group is to to educate and empower the buyer so that when they go through that buying process, number one, they're confident. Number two, they love their home. And number three, they're going to remember that what we did for them was more than just another agent, right? That's not what we do. And I think that's what Ben was trying to get to, is that you're going to get a whole lot more from the Aguilar Realty Group than you are from any other real estate agent. So that's it. Thanks for bringing that up, Ben. One of the things I did want to talk about transitioning onto being a prepared buyer in today's market is how much money are you going to need, right? So not only are you going to need your down payment, so whether your down payment is 3.5%, 5%, or 10% or 20%, that's just your down payment. What do I mean by that? Let's say you're approved for $500,000 and you want to do 10% down. That means you're going to finance 450,000 and you're going to need 50,000 as a down payment. But that doesn't cover all your costs, right? There's such a thing as closing costs. And what are closing costs? Closing costs are associated with your escrow fee, your title fee, your endorsement fee. It's going to be like your underwriting fee, your appraisal fee, and a gamut of other fees that are associated mainly with your loan, right? Even though Ben and I and our buyer specialists, we get compensated for helping you at the end of closing, you don't pay us directly, right? There's a built-in commission that the seller is offering us in order to bring a qualified buyer, an approved buyer such as yourself, to a property to help them sell it. But what you're paying for doesn't go to us as agents, okay? Your closing costs are mainly your lender costs, your escrow costs. But here's another topic that most buyers don't know, and that's prepaid expenses. Prepaid expenses is an additional cost. It's actually not a cost. It's exactly that. It's a prepaid expense. And what are those, Ben? Those are typically taxes, right?
yes,
You're going to pay a portion of your taxes on the new purchase up front. You're going to
yes,
pay typically your homeowner's insurance, who's going to cover it's typically called the homeowner's policy, right? And that
yeah.
homeowner's policy has to be paid out a year in advance, and you have to leave at least a couple months reserves. So that's a prepaid expense. It's not a cost. It's just something you're prepaid up front. And
How
the
about
third
home
most common,
warranty?
yeah, well, the home warranty is not so much a closing cost. That's typically a service or a warranty that the seller provides for the homeowner, or in the event the seller doesn't do it, we will provide that to a buyer as a courtesy, right? But home
Yes.
warranty is actually not a cost or a prepaid expense to the buyer. But the most common prepaid expense, Ben, is your prepaid interest. And what do I mean by that? Is that most buyers think that when they're paying their mortgage on the first of the month, they believe they're paying the interest that's due for the coming month. So if I make my payment on February 1st, they might think, oh no, my payment is covering the February interest rate, when in fact it's not. In the mortgage industry, just so you know, there's called in the rears, interest in the rears. So when you're making your February 1st payment, you're actually making the payment on interest and principal due for the previous month. So what
Yes.
is prepaid interest? Prepaid interest applies, for example, when you're buying a house, and let's say you close on the 15th of the month. Let's say we close February 15th. Well, guess what? Your first payment isn't going to be March 1st. It's going to be April 1st. So what happens is the mortgage company is going to charge you for those 15 days, or in February, it's only 14 days or something like that, because there's only 28 days in February. Or 13 days, right? So you're going to pay 13 days of interest, prepaid interest, at closing. So again, those are typically the costs. You're going to have down payment, closing cost, and prepaid interest rates or prepaid expenses, right? But here's the thing: in today's market, and even in last year's market, many buyers had to bridge the gap. And what do I mean by that, Ben? I know we had several buyers last year that had to bridge the gap between the price they offered, right, to the appraisal value. And what do I mean by that, Ben? Is we experienced last year where there's so many buyers interested in the property that they were overbidding on homes, 10,000, 15,000, 50,000, 100,000. And guess what? Sellers were able to sell homes, I kid you not, even above 100,000 from the appraisal value. Why? Because there was such large demand. In our industry, it's simple math, right? Simple economics. It's supply and demand. And when the demand is high and the supply is low, guess what? The prices are going to go up and people are going to overpay. So as a buyer, we're not seeing those big gaps of $50,000, $60,000, but you may need to bridge a gap of $20,000, $30,000. So when
Yes.
you're budgeting as a buyer for your down payment, your closing costs, and your prepaid expenses, it's important for you to understand that you may need some extra money to bridge that gap, right?
Yes.
Let's say we're out making an offer on a property at 600,000 and we go under contract at 630 because we had to compete with some offers, and the appraisal comes back at 610. Well, guess what? Most sellers are going to ask you to waive your appraisal fee up front. Now, typically we wouldn't recommend that, but we don't control the market. We're just giving you the information. We're telling you, here, they're asking for an appraisal waiver. This is what it means. And basically it's that. You're going to have to bridge the gap between what the property is appraised for and what the price is agreed on. Why? Because the bank is only going to finance the 90% or 70% or 85% of the value of the property based on the appraisal. And so you're going to need to bridge that gap between 610 to 630. And it's not going to always happen, but right now it's happening in a large percentage of transactions. So, don't be discouraged. I think this is one of the reasons why, Ben, too, a buyer consultation up front to discuss your personal scenario, your individual tailored, unique situation, and your finances is absolutely important, right? And
Right.
Ben has been doing a great job of doing some buyer consultations. Would love to do a buyer consultation with you as well. It doesn't have to be in person. With COVID right now, people are kind of, you know, Omicron, and everyone's getting over it and kind of high peaking and this and that. It's okay. We can do it over Zoom. Zoom is such a great opportunity for us to get in front of you to answer your questions. Let's get you on our calendar. Let's get you, educated, empowered, pre-approved, and Ben, Julio, Shala, the whole team at Aguilar Realty Group is ready to help you, find your home and get you into the next step of your life. Right? It's the biggest financial decision of your life. Don't be discouraged as a buyer. You just need to be empowered and understand what you need to be prepared for, and we can get you into a house.
One quick question before I let you go, Hector.
Yes,
So if
Ben.
they need extra money to bridge the gap for, appraisal difference, what are some of the ways they can get that extra money?
That's a great question, man. Thank you for bringing that up. There's various ways they can get it. The most common way is if you have a 401k. Most people don't know that because of the pandemic, the government actually instituted a new rule that they can tap into quite a bit of their 401k. It used to be there was a limit. I believe that limit has increased right now. But what I would do is I would talk to your 401k manager and let them know, hey, I'm in the market to buy a home. I may need some extra cash. How much of my 401k funds is available for me to use for my home purchase? Find out. That's additional money that most people don't know they can tap into. The other resource they could do is they can go to family members. They can go to family members and actually get a gift from the family member. Hey, mom and dad, I know that you have this house and it's kind of our equity, our inheritance down the road, but would you mind helping me with my inheritance now? I really need an extra $15,000 to $20,000 so I can buy my next house. You would be amazed. There's so much equity, sitting in homes right now that the parents of these buyers can actually maybe even refinance their home, pull some equity out, and gift them some money, right? Or they can tap into their personal savings as well. But a gift from a family member and 401k money are probably the two highest, most common places where people can find additional money to buy a home.
That was great. Thank you so much. I think we covered quite a bit of different things from A to Z on why being an able buyer in today's market. And, I appreciate your time, and even in the midst of you having to go somewhere and do something, and hope a lot of people got some value out of today's broadcast.
Thank you, Ben. I appreciate that. I hope you guys got value from that. Once again, if you're watching us on Facebook Live, thanks for joining us. Also, remember to subscribe on our YouTube channel and check out our other
Yes.
videos. We'll put some links in the descriptions for you there. You can find us on YouTube, and there's a lot more information. Our goal at Aguilar Realty Group is to educate and empower our clients, not only to help them with their largest financial decision in the future, but to establish a long-term relationship.
Yes.
We see ourselves not only as real estate agents or realtors, but we see ourselves as financial planners. We may not be certified in financial planning. We don't know how to do investments and things of that nature, but we know how to guide you through the process of buying and selling a home. So we look forward to the opportunity of serving you. If you're interested in the link that shows you on our website the actual buyer processes, and you want to see that before you actually do a buyer consultation, again, send us a message, send us a DM, put it in the Facebook comments, or even reach out to us on YouTube. Our number is located on the stream banner below. Thanks again for joining us, and we look forward to next week's video and education and training. So thanks again for joining us, and I look forward to seeing you guys next week. Take care, everyone.
Take care, everyone. Thank you.
Thank you, Ben.